There's nothing worse than deciding to be proactive on April 30th. And so you know what the result of that is. They go down to the car dealership, they buy $100,000 vehicle. They don't even profit 20, 30, 40, $50,000 from their business, and they're buying a $100,000 vehicle that might not even be ordinary and necessary for them to do work, right?
How's it going, everybody? I am your host, Ace Guzman of the MMM Podcast. And today, guys, I got Mr. Chad Brown, CPA out in Nebraska. He's just telling me that it's negative over there where he's at right now. I can't even fathom that thought because I myself am over here freezing my ass off and it's barely 30 degrees out here in Edinburgh, Texas. But I'm going to go ahead and just give him a brief introduction before we get him going. Uh, with 25 years of dedicated services, Chad S. Brown, CPA, stands as a beacon in the accounting and tax planning sector, specializing in fostering the growth and financial well-being of small businesses. As a certified public accountant, Chad has mastered the art of strategic planning, meticulous bookkeeping, and savvy tax optimization, making him the trifecta for business success. Over the years, Chad has founded multiple tax offices throughout the Midwest, demonstrating a profound commitment to accessible and expert financial guidance. His most notable achievement includes securing over 150 million in tax credits for hundreds of small businesses nationwide, significantly impacting their operational prosperity and stability. Chad's expertise not only guides businesses towards financial clarity, but also empowers them to reach their full potential. I love it. I love it. I love it. So, brother man, Chad, go ahead and introduce yourself, man. What's your story all about? How did you get started in the tax industry?
Yeah, man. Well, I appreciate you having me, Ace. It's a pleasure to be here. And you know, that bio is written by folks that have a knack for making folks look really, really good. But just to kind of break it down into simple terms, I like helping people, right? And specifically small business owners. But my backstory, how I got started, I was one of those guys that went to college not knowing what he wanted to do, but I got really good at kind of hanging out with the wrong crowd in the wrong places and that sort of thing. And after a year or two of doing that, probably a year and a half, 2 years, I decided, I need to find some stability. I need to get back into college and focus on something, right? And that something I decided on was accounting and tax. And the reason I did that is because my dad was in tax. He was director of federal tax for a large Fortune 500 company, and he did well, right? And I always kind of respected my father, and we had a close relationship, but I admired what he did professionally. Not that I knew the ins and outs of what he did, but the way he supported his family, the way he worked hard. And I said, well, let me just go down that road or try it. And like many accounting students or majors, kind of go down that road. And I got the degree. I started working for a small, I'd say a regional CPA firm here in the Midwest. We did some national work, but not a lot. Um, I got placed in the audit side, the accounting side, and although I liked certain aspects of it, it wasn't something that I really was passionate about. And then I started working with small businesses, more in their accounting side and their tax, and I saw, that I liked it. I enjoyed working with small business owners. Kind of fast forward now, I decided to leave the CPA firm, get into a retail tax franchise for a number of years and built that up as a small business owner, not necessarily a tax guy. I was both. I did the taxes, but I really wanted to be in business for myself. Uh, as you probably know, and many of the listeners, retail tax is different than working with small businesses. So I kind of found my way back into wanting to do that. And so we founded Real CFO Inc., which is a company underneath Kensler Brown Companies. And my focus has been over the last couple of years to work with small businesses, both from an accounting bookkeeping all the way to tax prep and the real value that you can add in between. I also have a separate business where since 2004 that I've owned working with small, mid-sized businesses and capturing tax credits, mostly federal work opportunity tax credits for hiring individuals. So kind of had my leg in with supporting small business for a long time. Now we're just really devoted and passionate about digging in and making that really um, who we are as an organization.
I like that, man. I like that. Wow, what a journey, dude. Really, what a journey.
Yeah.
And I think um as a tax professional, we kind of have to be some type of crazy to love this, man. Because when I was doing my first event, I had my first event back in December, right? And before I started the training, I go, if you guys who's new to the tax industry, like who's going to be new to it, right? And some people have raised their hands. I go, okay, well, this is your last chance to go, and the door's right there to leave because as soon as we get started, because there ain't no turning back, you know.
Yeah,
uh, um,
it takes a special mind to
yes,
sure.
you got to really get like some type of like high from doing this stuff, man. And really, what it is, it's the fact that we get to help people.
Right.
And the way I kind of explain it is, I'm trying to get them from point A to point B, right? We see this huge tax liability. They're tired of paying it. Usually clients will come to me and say, man, dude, like, I feel like I'm working for the government. I feel like I'm just working to give all my hard money to them. What for? And it's like, well, you know what? The IRS is one of the worst business partners you will ever have. I mean, it's the truth. Now, when I talk about going from point A to point B, it's essentially optimizing or strategizing or essentially seeing what they can invest in versus having to give that money to Uncle Sam. Where can we put it that's going to not only reduce their taxes but build their wealth, right? And those are things that we look into um, here and in my program when I'm talking to clients. What do you offer to your clients when it comes down to tax planning? Do you have some type of program or some type of coaching that you do with them, or how does that necessarily work?
Yeah, typically what we do is we'll look at a client's financial situation, both from their business standpoint as well as how that flows through to their personal return. Most of our clients are flow through entities, S corps, LLCs, that
Right
sort
on.
of thing. We have a couple of C corporations, so that's a little bit different. But anyway, we kind of do an initial assessment and analysis of their prior year returns, kind of see where maybe they missed some opportunities to do that to save some dollars from taxes. Sometimes we can go back and help facilitate refiling or amending those returns to capture some of those credits. Really focus on kind of forward looking, and we'll start with putting together a basic tax plan with them, see what we can save. And my goal is to, whether we're meeting monthly or quarterly moving forward, that is, it's always top of mind, right? So we don't have a set program, say, hey, these are the 3 widgets that we're going to offer to save you money. Sure, there's a bag of tricks there that are pretty common that most businesses can use, but we really look holistically at their business, at their tax situation. How can we help minimize their tax liability? What I typically find with a lot of businesses that end up overpaying is they don't have good systems in place just to monitor their overall financial situation, right? So one of the things we do is we have the ability or incapacity to help them get their financial statements in order. I look at the financial management of a business and personal as well as 4 pillars, right?
There you go.
There's accounting and bookkeeping. That's kind of the controllership side of it. That's current and historical data being put into whatever system you have, whether it QuickBooks or Zero or spreadsheet, right? For that matter. What is your system to account for that and control those numbers, control where that data is being input? Um, that's number one. Number four is tax preparation, right? Both of those are kind of a means to the end, right? You have to have this in order to file your tax returns, maintain compliance, right? Or payroll tax returns on a quarterly basis or sales tax. You have to have number one before you can meet the compliance obligation, which is number four. 2 and 3 are kind of where we really want to live. And that's both your financial strategy and your tax strategy. What are you doing to leverage your assets to provide more impact to your bottom line? And then how do you minimize the tax exposure that results from that? So if you don't have one, it's hard to really do financial strategy because you don't know where you're at right now to project out or do budgeting, forecasting to see where you're going to be in the future. Part of forecasting is, okay, what's the tax exposure in these events happen? Budgeting is tracking the actuals, versus the budget or the forecast to see where you're at and making those decisions throughout the year instead of, oh no, it's March, right? I don't have my stuff together. I need to extend my corporate return. Or now it's April, I don't have my stuff together. I need to extend. No, we're living it throughout the year and keeping it top of mind. And it's like anything, you keep it top of mind, you're intentional about it, it typically gets done.
Of course, your focus becomes what essentially manifests, right?
Yeah.
What you bring to life.
Right.
What you just said right there, man, was actually on point because what I've realized a lot of what people do, a lot of what clients do, right? They'll come during tax time and they worry about taxes around that time. That's the worst time to worry about anything.
Yeah.
Because the reality is they're focused now on the past, which is okay, right? Past 2024 just happened. Now they need to catch up their books. They need to get all the transactions categorized. Profit and loss needs to be as accurate as we can get it. Balance sheet needs to be ready to go. And it's like, well, first and foremost, like that should have been something done all throughout the year. All right. This isn't all year thing. And realistically, though, if they don't have their books in order, nobody can help them.
Right.
They can't even help themselves. Like they don't know where they're at. They don't know what decisions they need to make. They don't know where to make any cuts if they need to make any cuts. They don't know where they're overspending. They don't know any of their balances on any type of account within their expenses. And so it becomes a more of seeing where they're at with the bookkeeping is what I realized a lot of the part to begin the strategy is on the bookkeeping because the bookkeeping is where we start. And that's actually where I had started my journey was actually within the bookkeeping side of,
Okay.
you know, essentially bookkeeping services.
Right.
I worked at a bookkeeping firm for a while. And so I had already, knew what the ins and outs were, how to get all that going. And then I just, COVID had happened. I lost my job. I remember I was like, you know what, I got this skill. Why not, utilize it in a way where I can, be of service to individuals. So then that's actually what was my first thing was bookkeeping. And then from bookkeeping, I went to tax preparation. And then from tax preparation, I went more into the strategy side. The thing about tax preparation, though, I didn't realize that I was already doing tax strategy when I was doing these type of returns, preparing returns for individuals, because, I was there doing, the S election for, LLCs, clients that had LLCs, were helping them do the S election. That in itself is a huge, and that's a powerful strategy, because not only they don't have to spend any money, right? They don't have to essentially, put money somewhere else or make some type of expense. It's already there, right? And it's just a reclassification of entity. Yeah, and and it helps them avoid the self-employment taxes. Essentially, though, they have to get themselves on a reasonable comp, but it's good because I mean, just by doing that one strategy, we can save clients like thousands of dollars, man. We
Yeah.
really can.
No, I'll
And-
give you an example. I just got
Yes.
the phone this morning with a gentleman. He has rental real estate. right? And there's certain structures that you want around it, of course. And he's young and he's growing, so there's opportunity there to make sure he structures it right, not just from a tax saving standpoint, but from a transfer estate, standpoint. But I mean, structuring, he has another business, which is him just being a realtor. And currently he's doing very, very well. Just by making a few elections and structuring things right, we're able to save him over $20,000.
Mm.
But this conversation was never had the last year. Before we jumped on, that's why I was a little late getting everything kind of set up. I had someone I spoke to about, they owed quite a bit of tax last year and they were looking at opportunities to maybe offset some this year, doing things a little bit differently. So I put something together. I mean, a base tax plan, is going to be like $2,500 to do a base tax plan, which we could find some savings right away, potentially some cost seg opportunities within there, and an ongoing kind of monthly or quarterly fee, whichever they opted to do, to continuously strategize. Well, I don't know if they're going to go our way, but in full transparency, they're looking at other options for cost seg and didn't seem to think the other planning opportunities were a fit for them. I'm like, okay, maybe I misunderstood. You wanted to be proactive about your tax planning, not just your estimates, but your tax planning to save tax dollars year over year over year with the expectation that your business is going to grow, other opportunities are going to present itself. And I don't know what I can save you on those, but I know we can have conversations about them so we make sure we approach them the right way. And they're not willing, I don't think, we'll see what happens, to go down that road. And that's okay. But now they just want to be stuck in that space where they just have a tax preparer with none of that value in the middle. And it's hard to, I spend too much money on taxes. I spend too much money on taxes.
It kind of cut off right there, but you're good now. I can hear you.
Am I good?
Yeah,
Am
yeah,
I
it
good?
kind
I'm
of like
sorry.
cut off a little bit.
Yeah, I think I hit a button. But yeah, they say, well, I spend too much on taxes. I want to talk to you about it. Okay. Well, we can help alleviate some of that. And based on just looking at the information, I can save you $10,000. And that's an ongoing thing. But they don't want to spend 2,500 for the tax plan and to implement it and then monthlies going forward, right? And so it's an education piece, right? And I'm
Yeah.
not down on this guy, but it's an education piece that you have to talk with owners to get them to truly understand that it's something that they have to it's like going to the gym, right?
Yes.
If you don't go to the gym every day, and I'm not saying you have to look at your numbers every day, right? But you should know key metrics daily, right? If you're operating a business, you need to look at your tax, exposure periodically throughout the year.
Yes.
Give yourself room and a runway to make decisions. There's nothing, there's nothing worse than deciding to be proactive on April 30th. And so you know what the result of that is. They go down to the car dealership, they buy $100,000 vehicle. They don't even profit 20, 30, 40, $50,000 from their business, and they're buying a $100,000 vehicle that might not even be ordinary and necessary for them to do work, right?
Mm. Yes.
It's education. So I'm glad there's a lot of folks out there like you and I that are trying to educate the folks on this.
100%. And you actually just talked about one of my pillars right there. So I myself, I have three pillars, and the first pillar that I focus on is financial clarity. Where do they see themselves in 5, 3, and 1 year, right? And what's their financial vision? What are their goals? What are they trying to get accomplished, right, with their business, with their personal life? How do we get them to be clear on their financial vision, and then how do we now integrate that with tax strategy, right? Because tax strategy is part of their vision, their financial vision.
Mhm.
Now, the second thing I focus on is proactive tax mapping. So that's where educating the client comes into play, making sure that they understand the tax strategy, they know the ins and outs of what I'm talking about, the terminology, any questions that they have on the strategy, and essentially getting them from point A to point B on the proactive tax mapping. That even includes mock returns, doing the essentially looking at their books, getting everything forecasted and then implementing a strategy on the mock return to show them the benefits of the return and then explaining how it works. And that's part two, right? The education side.
Mhm.
And then part three is strategic wealth building, right? It's building the wealth and then setting up for generational wealth as well too. And part of that is making sure that they have their estate planning into play. If something were to happen to them, how is their family going to be taken care of? How is their family going to essentially get everything, all their building, all the wealth building that they're doing, all these assets that they're accumulating, how is that going to be passed down to the next generation? And these are the things that a lot of high income earners, a lot of high performing people look into because that's something that means a lot to them. Because a lot of these high performers, they like, I know, like me, I'm getting emotional here, but it's like a why, it's a purpose. Like I want to, make I want to make seven figures so not only I can have a good life, but so my kids can have a good life, and from here on forward, my generation can have a good life. But how do I teach that? How do I replicate that? How do I make sure that when I decide to, or God decides to take me, um, how do I make sure that that's going to be passed on? Right?
Yeah.
Because all that is going to be built up. And I'm not taking any of that with me to the grave. It's going to be left on my family to take over. And those are things that a lot of people overlook. But I will tell you this though, I like working with individuals that are high performers because a lot of them are really smart. I've noticed that a lot of them, like my favorite clients, and these are my favorite clients. I don't know about you, but I'm pretty sure my favorite clients are the ones that like understand and they research and they know their due diligence. And it's just so easy to talk to them strategy because they themselves already have done the work. And I tell clients too, and I've said it in on Facebook Live. I go, I 100% believe as a business owner, no matter what industry that you're in, you need to understand basic tax.
Hmm.
You need to understand how it works because that's business. It's going to affect you. You're
Yeah.
People are out there making money or they're making all this money and they're not even planning on having to pay the tax to the IRS. They come at the end of the year or they come during tax season, get their books done, and then they have this huge tax bill because they took home like, 50, 60, 100,000 and they have to pay back like 20, 30,000,
Yeah.
probably even more to the IRS and then they get all pissed at me
Right.
because I'm the one that, told them the bill and it's like, well, what was your plan all along?
Yeah. Yeah.
What
Yeah.
what what, what was your plan all along? What were you planning on doing? Like,
They don't know, and that's what, anytime there's uncertainty, it comes as a surprise because I think honestly, most times don't know. They might know subconsciously they made money, but they're used to what they've been paying. Sometimes it takes an event, something to really shock them to come to the realization that we have to do this planning. But that said, I tell people, uh, tax planning has two parts,
yes.
right? One is knowing what your exposure is. All right. When we can stop there, as long as you know what your exposure is, you're avoiding any surprises. You can make, decisions kind of as to how you're going to pay that. And that's it. Right. Because a lot of the strategies that we implement or we recommend or implement, it does cost some cash outflow to get these done, like real estate or different investments, various things. It takes money to save money, right? So to speak. Folks might not be in a cash position to do that short term, to maximize. So at least they know we try our best to kind of make it so they can do some things so they can offset their tax liability upcoming. But in some instances, they just choose not to. But at least they know what it's going to be so they can plan for a few months or make
Yes.
estimated tax payments, right? Um, I was talking to somebody recently and they said, well, I don't know if I even need to meet quarterly or we need to even do this if it makes sense to me because I typically don't make estimates until the third quarter. My tax preparer tells me what those are. So I don't really know in terms of planning. I said, well, the two returns you sent me, you hadn't made any estimates for either of those years, and you owed over $20,000 at the end of the day. So whether you know what they are, you're not making them, at least historically. So we can help you determine what they are, or they can too, but then we can minimize it, relook at it, and maybe you don't have to make any like you have been in the past. You haven't been making any in the past, but you still owe the tax. Um, let's reduce that tax burden, but it's going to take an investment from them to do it, and they have to decide at some point what's that pain threshold that they're willing to pay or commit to work with professionals like you and I to make sure um, they're saving some dollars.
And I think that's a heck of a deal, though. If you're charging, 2,500 for the tax plan to essentially show them how they're gonna even save plus more of that, right? Probably even 10 times more of that.
Yeah.
And it's like, why not make that decision? Really, what it is, though, what I've realized, because I've had that issue too. It's the value portion. It's either the scarcity mindset, or they
Mhm.
haven't been scared enough or shocked enough with the tax that they have to pay, or they live a very lavish lifestyle and can't afford it either, because
Right.
they rather have that 2,500 to fund their lavish living versus having to hire somebody to take care of their stuff. It's true.
Yeah.
I mean, I've seen it. I've seen it. Like, I've seen people live way beyond their means, and it's ridiculous. It's kind of like nerve-wracking when you see, especially, when you see them make so much money, and then a lot of that goes into draws, and then, it's just, well, dude, you took all that money home, right? And then it's that like that short term, right, where they don't have that capital short term. I've also realized the best clients to work with are the ones that are disciplined, and they
Mhm.
are like I have a good handful of these clients that are very financially disciplined, very financially literate, and they're the best clients to work with. And I've realized that the clients that are disciplined are the clients that do their research. They're financially literate. I mean, literate, not financially literate. Sorry, they know their stuff.
Yeah.
They know their stuff, and there's a reason why they continue to succeed in their business because they study. And part of studying doesn't mean just do it once, or part of running a business and exceeding higher heights or going to the next level or going to that next cap. It doesn't necessarily mean, hey, well, I'm gonna just go hire a tax guy and I'm just gonna like worry about taxes at the end of the year, or I'm just gonna do this and whatever. Like, that's not that's not someone I would want to work with anyways. And at the same time, dude, I don't know how long they're gonna probably be in business with that attitude. Like, it's the truth. Like, reality is what it is. And the thing is that in order for them to level up, then they got to level up in all areas in their life. And if that even requires them to level up somewhere else before they even work with me, I'd rather that happen before they
Yeah.
even come over here and do strategies with me, because part of these strategies are going to require their time, because it's a 50-50 input. It's 50% me doing the coaching, the advisory, and the other 50 is them doing the legwork. Especially when it comes down to real estate, right? For real estate, if they don't, if they could have the spousal rental loophole, if they want to utilize the spousal rental loophole, but they have to essentially get that real estate out of the passive and essentially turn it to a non-passive activity. They
Right.
could do that right there short term, or they could essentially do that by qualifying for the real estate professional status. But that's going to take time, and it's going to take them to put in hours. And once you start telling people about this stuff, they get kind of scared off. But at the same time, it's like, it's actually okay, and it's easy to meet those hours. But this is what you have to do, and these are the activities you need to do in order to meet these hours. And it's just, some people kind of get off putting on it, but then there's the people that see the value on it, because they're like, well, shit, if I have to just work like an extra, 10, 15 hours a week and managing my real estate to qualify for real estate professional status so I can eat into my taxable income, why not? Like, why
Yeah.
not? And then you were talking about cost seg. Um, for cost segregation, do you do that yourself in-house, or do you have an outsource, someone that you take that to?
We have a third party that we utilize to do that.
Okay,
I mean, we do a lot of the inputs, the review of the actual cost seg study, but they actually do the engineered study, and it's supported. It's not a DIY. so to speak. And I think that's one of the challenges too. I know a lot of especially the younger folks that maybe haven't been exposed to a lot of pain to a certain extent from the IRS or different things. Sometimes they're more reluctant to jump on. They don't have retirement, so they're young, so they don't need it. They got a long runway to accumulate that. So we'll do that next year, the year after, right? So let's not go down that road. They try to take a shortcut with a cost segregation study and go into the DIY stuff online and plug in some numbers, and it spits out some stuff that maybe that works in some instances okay, but uh, I'd rather have an engineered study that's supported with an audit protection behind it um, to do it. So uh, that's why we partnered with somebody that's all they've done for years.
There you go. I love that, man. Part of my vision for business, right? I got a big vision, man. My goals are so scary they scare the crap out of me. I'm not lying. And I think if your goals aren't that scary, right, or they freak you out like that, then I think they're not too big, right?
Yeah.
Um, and I have this vision, and part of my vision is having different departments. And for some reason, I want to get involved with just having cost seg in-house. I mean, for right now, obviously outsource it, but I would like to offer that in-house, man. But I know there's like a lot of shit to it. Like you
Yeah.
have to have like some type of like engineering background. I'm probably gonna have to partner up with someone on that. But
I'll make an
it's
intro.
that
I'll,
what?
I'll make an intro to for you.
Yeah, man. Let me know. Let me know. Get me connected. I need to see what's going on there in that world.
Yeah, the cost segs. Yeah, I mean it's something that you can learn to do, just like a lot of things, right? But there's a lot of different elements to it if done right. And we could do it, but it's one of those things that takes a lot of time off of us. So we created a partnership with somebody, and it's just like the other thing, like R&D tax credit. There's some things that we can do internally, but we have an R&D partner that we utilize as well, research and development,
R&D.
and
How does that work? Can you explain that?
research and development tax credit. Yeah, so companies that invest in research and development, like creating new
Like
products or new
Elon
systems,
Musk.
right, right, yeah, new systems and processes, those sorts of things. Now, there's a lot of R&D folks out there. A lot of the stuff that they're saying companies qualify aren't necessarily. Don't want to say they're not above board. There's a gray area, and they tend to slide over into the wrong side of the gray, in my opinion. So we have a partner that we utilize that came from a big four firm. That's what they did, R&D. They have their own boutique firm now, smaller company. And that's who we work with, for R&D. I can talk to you more about that, make an intro after, but it's a good savings. My
I
other
need to learn more.
company,
I need to learn
yeah,
more about that one. I haven't touched the R&D or even heard what that was. I mean, I've heard of the concept of it, just not
yeah.
really studied too much of it. I need to get in on that.
Yeah. It's a good credit for the right opportunity. I mean, we worked with a manufacturer out of Ohio or Indiana, I'm sorry, and we were able to capture them thousands and thousands of dollars of tax credits
Mm,
from research and development because they were manufacturing. They were developing a whole new computerized product line. They were programming systems and the computers to run autonomously or whatever, that fancy word is. They were bringing additional folks in to do that. So you get a portion of the wages that are allocated to research. The both employees and contractors use, um, you know, uh, product, supplies, all that stuff related to it, you can get a tax credit for. And as you know, a credit in many cases is much better than just the expense deduction. So, but it's got to make sense.
yes. I was
Like
about to say that.
yeah,
I was
any
about to
IRS rule, it's got ifs and buts and levels to it. So it's not just a flat, tax rate. You have to know the game, so to speak. And then my other company, Mankind, we help companies get tax credits on their new hires. So
Mm,
we essentially work with the Work Opportunity Tax Credit Program. If you're in a business that hires people regularly, maybe you have high turnover or you're growing rapidly, we'll work with companies and we screen their new hires either over the phone, uh, or most of our clients use our online system to have their new hires go through and answer a series of questions, and we determine if it qualifies the company for a tax credit, if that new hire does. So, and then we
mm,
calculate. So there's opportunities there. So when we're working with small businesses in the tax credit world, right? Because you might have the Apple or the Tesla or the bigger companies that spend tens of millions of dollars on research and development. They might get $8 million worth of credits, right? A small business spending 30, $40,000 might get $3,000 worth of credits. But that 3,000 in comparison to what that big company is getting means a lot more to them, right? That small business may have that might cover 2 months worth of rent in their facility.
yes.
I know, right? So it's a big deal for the family business. And even if they're startups and they're losing money, so tax credits don't do them any good, right? The R&D can be a payroll tax offset.
Mm,
So and these are
mm.
things that a lot of small businesses don't know about. And I think the fact that
Man, I
one, the
like that.
IRS is kind of closed vest. If you want to know anything, you go out there and look for yourself on their website. Small business owners, we're busier than you know what doing our business, right? Doing what we do to make money, put food on the table for family, our employees, everything. So we got our hands in every pot, so to speak, to a certain extent. And we don't have time to do all this research and stuff. So when someone like you or I come along, we start talking this stuff, they're like, oh, that's too good to be true. It doesn't apply to me. That applies to the Elon Musk of the world, the Tim Cooks of the world, right? It doesn't apply to me. Well, you start adding up the R&D, the WOTC, you get one credit here, one credit there, one credit there, one credit there. It's $10,000, $15,000. And that's worth something, right? But it's changing that mindset, intentionally focusing on your financial piece, or having an advisor that's really there for the right reasons to meet with you regularly, like you said, coach to a certain extent. This is how we need to do things.
Exactly. And that's exactly what we do in our field, man. We're coaching our clients to success. And I like that. I'm gonna do some more research on that. Do my due diligence behind the R&D credit because the reality is that, you know, more money that the client can save is more money that they can put back in their business.
Yeah,
More money that, like you said, put it for rent, put it for, maybe they gotta buy, product. Maybe they gotta, put that wherever, whatever that means to them.
yeah,
And the reality is that it means a lot more to the small businesses than it does to the big corporations.
it does.
And and it's such a big focus to get on. But I was gonna say, so R&D credit on that, is that would be considered non-refundable or refundable credit? How's that work?
It's a non-refundable carry forward
Okay.
credit. Yep.
Is that, and so
Yeah, but
that
like I
if
said, like I said, if you can't utilize the credit, many small businesses, and I don't know the ins and outs of it, right? This is my partner's deal.
yeah.
But even if you can't utilize it because you're not profitable, right? So if you're not profitable, you don't have any taxable income, you have no tax, therefore you can't use the credit. Those R&D credits, or at least a portion of them, can be used to offset payroll tax. So in your
Wow.
941 filings, right? So if you're a startup and you have 10 employees and everybody
Wow.
is essentially doing R&D, and you're paying 10 employees $50,000 a year, let's just say for simple math, that's 500,000. You're paying at least 7.5% of that as employer taxes, right? So that's 30. So you have 35,000 that you can offset then get refunded back to you. It's similar to the employee retention tax credit, so to speak, right? Where it was a offset.
Oh yes, yes. Right
So
now, I'm
even
actually I'm actually going through some paperwork now with ERC with
yeah.
one of my clients. Yeah,
So
man.
if you're not profitable because you're a startup, and most startups aren't until you're 3, 4, 5, right? You can still benefit from some of these credits. And even if it's not a credit against payroll tax that any business, even if they're losing money, incurs because they're paying employees, like the work opportunity tax credit, it's a non-refundable, but it carries forward for 20 years.
It's still, yeah, no, that's still doing
Right?
damage, man.
Yeah,
That's
so
still really
you
powerful.
might get
Yes,
$10,000 worth of credits now. You
there you
might not
go.
use them for a couple years, but that's put it in the bank, man. Give you
Yes.
an example. I own some retail tax franchises, and we screen all of our employees to see if they qualify for work opportunity tax credit. A couple years back, we had one gentleman that was a rock star employee, he just happened to be a retired veteran, kind of in that interim period between retirement from the military and finding out what his life mission was after. He came to work for us in the retail tax office, and we ended up generating over $10,000 in tax credits uh, because he qualified for a veteran category
Mm,
that is a higher higher in credit. So
mm,
yeah, I mean it's worth taking a look at for all businesses that hire.
I like that, man. I need to check out that process, man, because we got a questionnaire, but our
Uh-huh.
questionnaire is more like tailored, like for like tax strategy,
Yeah,
Augusta rule, accountable plan, depreciation, whatnot.
sure.
But man, I need to take a look in that. That sounds really interesting. I really
Yeah.
like that, man. So I would say like because the majority of the strategies, I would say the ones that I know that are pretty powerful require like depreciation,
Hmm.
right, to help offset some taxable income. But credits as well too are just as powerful, man. Because
Yeah.
credits are dollar per dollar, if I'm not mistaken.
Yeah. Yeah.
Yeah,
100%.
it's dollar per dollar.
Yeah.
Um,
Yeah. And there's some opportunities out there. Real estate's a big one, though, especially for small businesses, and there's
yes.
rules to it. Um, yeah, I think our biggest hurdle though, um, and even the IRS states that, I don't know what the number is, 70%, 60%, 80% of small businesses are overpaying taxes.
Oh yeah, yeah.
Because they
Yeah.
know they're missing certain things, right? They know they're not taking it. Less than 10% of the businesses out there even know what work opportunity tax credit are. And those 10% are typically your larger mid-sized to large corporations that are just taking advantage of all these credits. Um, so it's an education piece. It's a um, showing small businesses that it's not BS, that it's real, but you got to make it part of your business, um, to be aware of them and intentionally um, look at your financial statements, not just from a tax standpoint, just knowing where your business is, having projections, having goals, right? Budgets, and something to track it against. It gets you more intentional, more aware, and then these tax credit ideas. Now you're more receptive to listening to them because you kind of know you're focused on it, so to speak.
100%. 100%. I love that. Well, brother man, we're coming towards the end of the podcast here. I wanted to, before we get off here, how can people find you? Where can they look for you on social media? How can they get in contact with you if they want to work with you a little bit further on these tax credits and strategies?
Yeah, I'd say, for one, if you're listening to the podcast, link up with Ace and he can connect us. But I'm on social media, Chad S. Brown CPA, on Instagram and Facebook. our business name. We're going through a transition of name. Kinsler Brown is kind of the parent company of our business, but Real CFO Inc. is the company that focuses more on the tax planning, business strategy, kind of the holistic approach, the four pillars I mentioned earlier. And you can find us on YouTube under Real CFO. And our podcast, we have a podcast called Real CFO on all your major channels. So you can find us. Just type my name or type Real CFO Inc. in your search bar. You'll find us. But again, also reach out to Ace, and I'm sure we'll have more conversations, Ace, and see how we might be able to work together to help. Because I think the more parties involved, I don't know all the tax strategies. You don't know all the tax strategies. I got a few in my inbox the other day from another gentleman I met that are just off the wall strategies. And I'm like, wow, this is insane. So collectively, I think working together, we can help a lot of people.
There you go. I love that. That's my belief, man. We grow together. We help each other out, and this is how we grow and we get to the next level. By
Yeah.
helping each other out, by helping each other get educated with each other, mentor each other, and be there for one another, especially in this tax world, especially during tax season. But with all that being said, Mr. Brown, Chad, it was a pleasure having you, sir. Thank you so much for joining me here at the MMM podcast. Y'all be safe, take care, stay warm, brother, stay warm.
Appreciate you, man.
Get your mind right, get your people right, and get your money right, baby. Let's go.